Thrivers, hello and welcome to our first of 4 sessions before the live Q&A on June 9th. I am so excited to be here with you, and we're going to start to unpack some of these foundational financial topics to hopefully get you headed in the right direction, monitoring and reviewing the right things in your financial world so that you can build towards success and ultimately move towards the financial freedom and the vision that you have for your life. Now, our first session today is around protecting yourself, right? Here's what I want you to think about. You are your biggest asset. Your ability to generate revenue and bring money in is your largest asset. Now, we can actually let that set in numerically, because if you think about how much money you make on an annual basis and how much that's going to grow through the years, right? It's going to adjust for inflation, cost of goods and services will go up. That number alone, the money you will generate, is going to be significantly more than any house you buy, any car that you own, potentially more than any amount that you have to invest into a business at any point. So protecting you is crucial as a step one before we get into all the plans for tomorrow and beyond. Let's protect today first. This typically is not the most fun topic in the world, right? Because what we need to do is stress test your financial plan to make sure that if a threat or a risk or a hazard came across your desk and impeded your ability to earn money for a while, it is not going to completely upset your long-term financial plan. So unfortunately, we have to talk about negative situations, worst case scenarios. But we're going to limit it to a few threats that I think pose maybe the biggest impact to your financial future, and try to discuss some things that you can be aware of to alleviate, remove, mitigate the impact of those threats long term. Now, here's what I'm going to hone in on. Something called an undefined risk. Now, that's insurance jargon. Don't worry about it too much. But when we talk about defined risk, that's a risk that we know how much it's going to hurt us by financially. Right? If I take my iPhone and I just throw it on the ground and it smashes, and let's say I don't have Apple Care, it's going to cost me about $1,000 to replace that phone. Okay, that's a defined risk. I know how much it's going to cost. If I were to go total my truck, it's going to cost me a set amount to replace a truck of equal value, similar mileage, same year, make, and model, right? That's a defined risk. We don't want to be just talking about insurance and worrying, unnecessarily just for the sake of it, but we do want to identify the things that are undefined risk and remove those threats, because an undefined risk is really bottomless liability, right? That's the way I want you to think about it. Bottomless liability. These are the threats that we cannot accurately put a numerical value to the impact on. So the 4 categories that we'll discuss quickly: job loss, lawsuit, being sick or hurt and unable to work for an extended period of time, and dying too soon. Now, I'm going to address that 1, 3, 4, and then come back to number 2, because there are some additional things to think about when you're in a busy, chaotic environment on your feet all day, as most of you are. So, first and foremost, job loss, right? Now, ultimately, depending on what's going on in the economy, it's hard to maybe call what's going to happen when it's going to happen. Job loss really can only be mitigated with a few things, right? You could own a business, and then you kind of get the final say in whether you keep yourself employed or not, right? But if that's not your current situation, or you have no desire to own a business, some of the other things to consider about is becoming, so valuable to the business that it's really hard to let you go. This is really about honing your craft, continuing to educate yourself, learn new techniques, build great relationships with your clients, because ultimately that's of value to your practice and to the person employing you. They're not going to want to see that go, because you're helping generate revenue. That's how you keep your job available and keep a career path on the table, right? Now, aside from that, more financially speaking, you do want to have some emergency savings. There's really no insurance necessarily for job loss. Obviously, there's things like unemployment. If it got to that point and you had to file for it, that's a different conversation. But having an emergency fund and maybe a couple months worth of expenses stocked away somewhere liquid, which really just means I can access it quickly without huge penalties and taxes and fees, that's going to help remove at least the emotional and mental burden of any potential job loss. So first, undefined risk, that's something that we want to take off the table. Now, let's move to sick, hurt, and unable to work. There's really 3 core items that I talk about with clients, and I won't spin our wheels too much getting into the details of them, but ultimately what we're talking about is if you lose your ability to stand on your feet all day and do hair, then it's going to impact your revenue. It's going to impact how much money you can generate. And we really don't know how much that could be depending on the severity of that sickness, illness, injury, whatever it might be. So a few things that I talk about with clients is medical insurance, long-term care insurance, and long-term disability insurance. Now, you know how medical insurance works. I'm sure you're very aware. What we're looking for really there is catastrophic coverage. Never want you to be in a situation where you have this huge medical bill. You're responsible for all of it, right? At some point, we want to move some of that risk and some of the responsibility to indemnify the hospital to a large insurance carrier. And there's multiple methods and ways that you can cover yourself medically nowadays. Long-term care is also one that you don't want to belabor too much because it can be really expensive to have standalone long-term care insurance. It's probably more feasible to build long-term care riders or features or benefits into other types of insurance policies. But if you do have a family history of any degenerative disease or disorder or anything like that, it is something that you should probably discuss with an insurance professional. Now, the one that I do want to hone in on is long-term disability. Truly, I don't like that terminology, but that's the technical definition. Really what long-term disability is income replacement. Think about it this way. There is insurance that exists so that in the instance that you are unable to, for whatever reason, go to work and do what you do for a living for 90 days or more, it pays out 60 to 70% of your gross revenue on a tax-free basis until you're able to return to work or until retirement age. That sounds too good to be true. But insurance's job is to indemnify. If for good reason you're unable to work, there are insurances that exist that indemnify you, which pay you back the amount that you would have otherwise generated if you were healthy enough to go to work. Now, here's why I hone in on that one. We talk about wealth building and wealth creation. The number one cause of mortgage foreclosure in the United States is a long-term disability. And it's not even close. It accounts for half of all the mortgage foreclosures in the United States. Why is that a big deal? Well, home ownership ultimately is the number one determinant of generational wealth. So wherever you're at on your journey, if home ownership or some type of physical property ownership is on the cards for you, that's fantastic because it typically is an asset that appreciates in value and you can leave to a next generation. And it helps that generation develop ongoing wealth. Hence generational wealth. So long-term disability could have a big impact on long-term wealth generation, but not only that, there's a 1 in 4 chance that throughout your working years you will experience or suffer something extreme enough that could put you out of work for 90 days or more. So when we look at statistics of how much of an impact that could have, that's a pretty high number. So we want to be aware of, do we have things in place that if I need to take some time off, sickness, injury, illness, whatever it might be, there is something to replace my income in that instance. Now, we'll jump down to dying too soon. We've done a lot of research. We've found out that one day everyone is going to die, right? But there's 2 things we talk about with clients. It's your estate plan, which is really your direction for what happens with your assets or those that you give care to, like children, for example, in the instance that you prematurely pass away. So really important for giving that next generation instruction on where assets need to go and who's in charge of what. Now, by having something like a trust in place, and again, I'm not trying to get too much in the weeds on this, but you can avoid a very sticky, kind of clunky probate process, which is a state-driven process that just drags out and makes the whole instance of losing someone early just way harder to deal with. So for all my clients, if you're in a position where you have ownership, you have children, you have a home that would need to be passed along, definitely taking a look at something like a trust is beneficial to help alleviate burdens and tensions in the aftermath of, again, God forbid, an untimely death. The other piece is life insurance, right? Life insurance, one of the benefits of it, there's many benefits, but one of the benefits is to replace income, right? If you were to pass away early and you have family members or a household that's depending on your income, life insurance exists so that you can indemnify the household on the money that you otherwise would have generated. Now, ultimately, there's a whole bunch of different types of life insurance. If there's questions in the Q&A, I'm happy to dive into that. But having that as a replacement for the income you're generating can be a huge help financially if, again, God forbid, anything happened prematurely. I am in my 30s with 2 young kids. If something happened to me, I have enough life insurance in place to take care of my wife, to still invest and do the things we want to do for our children, and ultimately remove a lot of the debts that we do have, home, truck payment, those types of things, so that my wife has nothing to worry about in that regard. So those are some things to consider in that area. Now, I told you about the lawsuit piece, and we're going to hop back into that. Now, just so that you know, on a personal risk element, really where you're at risk for the biggest potential lawsuit is an at-fault car accident. So I'm going to kind of give you a quick hitting one here and just say, if you have your home and auto agent, just inquire about an umbrella policy. Umbrella policies are additional liability if your accident caused goes above and beyond the limits that you already have on car insurance or home insurance, right? Think about like a dog biting a neighbor or a kid, having an issue at your house or your residence. And an umbrella policy is an additional $1 million worth of liability. Now, the reason I bring that up is 90% of personal injury claims and lawsuits are $1 million or less. So I know by having that coverage, you've removed 90% of that threat, okay? But lastly, professional liability. This is the one, especially for those of you in a chaotic, right, on your feet, moving. Now, it may not feel chaotic because you're used to it, but for the typical person that's used to working behind a desk to walk into a salon and there's hair on the floor and maybe some liquids were spilled and there's people moving around and people are carrying products, a little bit more of a chaotic, hazardous environment, there is some potential professional liability at risk. Now, you may say, I'm not worried about that. The likelihood of someone slipping and falling, or, I'm so careful I won't mess people's hair up. You just never know what's going to happen, right? I have a good friend of mine, actually a colleague that worked in a salon for 17 years, and she had witnessed someone knock over a bottle of color onto someone's really, really expensive purse. I mean, we're talking a $10,000 or more purse. So having liability in place helps remove the threat that type of incident could have on your wealth. If you have to foot the bill for that, that could really impede your ability to save, invest, and build for the future, right? But we're taking those undefined risks, back to use that term, undefined risk, and wherever possible, removing the threat of that by placing it on an insurance company. That's ultimately the goal there. Now, I know that was kind of a quick run through of worst case scenarios, but here's why we have that conversation on the front end. If we can remove the threat to your wealth building potential today, now we can strategize and build for the future, knowing with a lot of confidence the likelihood that would be impeded is pretty low. So we do our due diligence, right? We want to make sure that we remove those threats, we figure out where there's gaps, and by putting the right pieces in place, we can focus on creating the type of financial future that we really want to create. So that's the bad stuff out of the way, right? We're going to dive into more topics over the next few days that are going to help you build towards the vision that you have for your finances and ultimately create the level of wealth that you want to create. We'll see you soon.